Hey, what's up, my friend? So, in this video, I'll share with you a simple trend following strategy, right, that works and you can use it to profit in the financial markets. So, what is trend following? Number one, trend following is about trading a variety of markets, forex, bonds, metals, commodities, and stuff like that. You want to trade a variety of markets. Second thing is you want to trail your stop loss, right? Only by trailing your stop loss, right, can you ride trends in the market. Okay, so you want to ride trends, you want to ride your winners, and this is achieved, right, by trailing your stop loss. And I'll share more with you later on how to do it if you are clueless about it. The third thing is that you want to cut your losses. Not every trade will be a winner. I would say less than half of your trade will be winners, right? So when the market turn against you, cut your losses and move on. Don't hesitate, don't think twice, don't hope, don't pray, don't do anything, right, that jeopardize your trading. Just cut the loss and move on. So with that said, let's develop a trend following strategy, right? So these are the markets that we will be trading. They are the futures market, S&P 500, gold, euro, yen, treasury bond, and heating oil. And the data that we'll do the back test is from 2000 till 2017. So about 18 years of data, including the dot-com bubble, 0809 financial crisis. So it's a good time period. Now the rules, right, of this trend following system is like this, right? You go long when the price closes the highest over the last 200 days. 3 ATR as your trailing stop loss, and you risk 1% on each trade. So if you have a $100,000 account, each trade, right, if it hits your stop loss, will not lose you more than $1,000, which is 1% of your trading account. And the short side is just the opposite, right? You go short when the price closes the lowest over the last 200 days. 3 ATR as your trailing stop loss and 1% risk on a trade. So now, some of you might be wondering, hey Rayner, what's the highest close over the last 200 days? What is a 3 ATR stop loss? Alright, so let me just walk you through an example. So this blue line you see over here is pretty much a Donchian channel. I just left the highs over here. I removed the other two lines. So this blue line over here shows you the highest, the 200-day high. Okay, that's the settings I use, the 200-day high. So over here below is just the ATR indicator, average true range. It measures the volatility of the markets. So this candle over here is pretty much has closed the highest over the last 200 days. How do I know that? Because if you just look at this blue line tells you the highest high over the last 200 days. So ask yourself, which is the highest high, which candle formed the highest high over the last 200 days? Well, it's probably this candle and this green candle over here. Then now ask yourself, which candle has the highest close? Well, probably it's this candle, right? It has the highest close over the last 200 days. So now what you're looking for is a candle to actually close higher than this candle. Okay? And this is the one, right? This new recent candle pretty much has closed the highest high over the last 200 days. Alright, so this is where we go long, because it has closed the highest over the last 200 days. So now, stop loss, trailing stop loss, how do we go about it? Well, if you look at the indicator, the ATR indicator, let's say the ATR value is about 80 pips. Okay? And remember, we are using 3 ATR. This means you take it a multiple of 3. So 80 pips multiplied by 3. You get about 240 pips as your stop loss. So far, so good. The next thing you'll do is then you identify what is the high over here. The highest high at this point in time. Let's call it X. Okay? So your trailing stop loss is simply X minus 3 ATR, which is 240 pips, right, which we got over here, and that is your trailing stop loss, and let's call it Y. Okay, so your trailing stop loss is Y, and let's say it's somewhere over here, right? I didn't calculate it. So that's how you set your trailing stop loss. So let's say, for example, X has increased. Let's say the price has moved up higher. Okay, then you just minus 3 ATR again, depending whether your ATR value has changed, and you get a new value of Y, which is your trailing stop loss. Alright, so I think this is something that you should be able to understand and follow. So moving on, now that you have understood the strategy, the results, right? This is what, traders are always most interested. What's the results, right? So over the last 18 years, we have about 236 trades on this trend following strategy. Winning rate is about 41.53%. Profit factor is about 1.48. What this means is that for every dollar you risk, right, you get back on average $1.48. Annual return is 1.78% with a maximum drawdown of 9.35%. Wait a minute. annual return is 1.78% only. I don't even think this beats the market, right? You know, if you buy and hold the S&P 500, you're getting like 9-10% a year historically on average, right? Maximum drawdown is probably about 55%. So this strategy doesn't even beat the markets. So what's going on down here? Hey, Rayner, you said trend following works, right? You said trade a variety of markets, right? Are you trying to smoke me? Are you bonkers, or why are you wasting my time? Right? So let's, think back a little bit, right? So recall, Rayner said earlier, trade a variety of markets. And this example, I think Rayner only trade 5 markets. That isn't really a variety of markets. That's like quite a little bit of markets, 2 little markets. What about now? Let's say instead of trading 5 markets, let's trade 20 markets instead. Let's increase the number of markets we are trading. Let's see how that works, right? So if you want to see, this is the month-on-month and year-on-year results. Clearly doesn't beat the markets. So now let's increase the number of markets to 20 markets and see how that plays out. This time round, we'll trade more markets, right? Gold, copper, silver, palladium, platinum, the S&P 500, Euro Yen, Euro Dollar, Peso, British Pound, T-Bond, Bubble, BUXL, BTP, 10-year Canadian Bond, heating oil, wheat, corn, lumber, sugar, about 20 markets. Futures market, and again, the data is from the back test is from 2000 to 2017. Again, same rules apply, same strategy, risk management, it's all the same. The results, will this matter? Let's find out. Number of trades this time around has increased to 937 trades because we are trading more markets, so you have more number of trades. Winning rate right now is about 42.8%. Profit factor 1.42. Annual return now is 9.89% with a maximum drawdown of 24.12%. Hey, now this is something that beats the market, right? S&P 500 average 9-10% a year with a maximum drawdown of about 55%. So right now, clearly you have similar returns to a buy and hold strategy with half the drawdown. Well, this now has actually beaten the markets. This is a strategy that has beaten the markets. Okay, so now, this isn't a strategy that you may or may not trade, okay, because it can be further improved if you trade more markets, like I think a number of those multi-billion-dollar hedge funds who employ a trend-following approach. They don't just trade 20 markets, some of them trade even more than 100 markets, because as you've seen, right, the more markets you trade, the more diversified you are, it would improve your returns relative to the risk, right? So this is just an example to share with you that trend following, it does work, but you may not want to trade it in live markets because 20 markets, to be honest, is not really a lot to start with, but it's more than enough to actually beat the markets and share with you this important concept. So what is the lessons over here, right? But before we talk about the lessons, let's have a look at the month-on-month and year-on-year returns of this strategy with 20 markets. So generally, majority are winning years. Okay, 08 financial crisis even had about return about 36%. Okay, so generally, right, a profitable strategy that beats the market. And the lessons learned. Okay, number 1, trend following works. Okay, you can see that clearly. What's important in trend following isn't your entry trigger, isn't the trading strategy, right? But if you ask me, what's important is the number of markets you're trading. You want to trade a variety of markets. Traders that say that trend following doesn't work, chances are, number 1, you're trading too little markets. You're trading either a few forex pairs, a few indices, or whatsoever. And if you do that, you can see, right, that it's not a strategy that doesn't work, but rather it's the number of markets you're trading is too little, and that's why you cannot ride trends in the market. You're trading too little markets. Okay, so trend following works, but you have to trade a variety of markets, especially many markets from different sectors. I've shared with you, from the forex, bond, commodities, metals, etc. Third thing, right, you have to ride your winners, right? That's the only way you're going to catch a trend. And finally, you have to cut your losses, right? Because you never know which trade will work out and which don't. And trades that don't work out, you want to cut your losses so you can move on to the next trade and hopefully see if you can ride a trend from there. Okay, so in this video, I hope I shared with you that, trend following, it does work, right? A very simple strategy that you can use to, ride trends in the market, and even share with you, what markets you should be trading to increase your odds of, riding a trend and even beating the markets. Okay, so with that said, if you want to learn more, right, about trend following, right, that's my bread and butter. Just go down to my website over here, tradingwithrayner.com. Over here, there's a link. Okay, then you just scroll down a little bit. There's this book over here. I call it the Ultimate Trend Following Guide. Click this blue button and I'll send you this guide, which is all about trend following, right? Riding massive trends, how to do it for a discretionary standpoint, and much more. So if you have enjoyed this video, you will enjoy this trading guide, and it's free. Just go to my website, click this blue button, and I'll send it to your inbox for free. Okay, so with that said, I've come towards the end of this video. If you've enjoyed it, right, smash the thumbs up button. Ding, 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 thumbs up, right? Subscribe to my YouTube channel, and if you have any comments, just let me know below, and I'll do my best to help. So with that said, I wish you good luck and good trading. I'll talk to you soon.